Hello and welcome back. So today we have to be talking about just the overall effects of what's going on in traditional markets. Okay, we are going to get onto FTX, we are going to get onto Sam Bankman-Fried, and we are going to talk about Gemini as well. 485 million outflows amid contagion fears. It's just getting worse and worse, as you guys all know. I will say I'm here alone, so drop a like for AJ. Hope that he gets better soon. He's not feeling too great, but the show goes on. So, like I said, guys, we're going to start with, and this is the reason why I wanted to delay it slightly. We're going to start off with what happened at within the UK, really. So they came out with their autumn statement. Now I've got a couple of bits of information for you here. So I'm going to go through these. So what we're looking at is a tax on oil until 2028 of 35%, which is pretty crazy. But this is going to be on the big oil companies so that they can kind of bring a little bit of this money back. And then also they're going to have less gilt selling than anticipated. It's supposed to be 185 billion. That's going to be essentially raising money. They've come in under those estimates at 167 billion. And obviously with raised import costs, this because of the weak pound, this is affecting the cost of living essentially. So this whole cost of living crisis that everyone is seeing in the UK is pretty much the same story that we've seen in the US. And the Fed are taking some pretty crazy measures. Part of the reason why the market's not like pumping crazy, even though we're still getting good numbers, is that the Fed are still coming in and they're still saying they're going to be much more severe and much more like, shall we say, um, it's just hawkish. It's just hawkish. They're going to be extremely hawkish. So anyway, the story in the UK, 11.1% CPI, which is absolutely mental. Obviously, some of those costs of goods has gone up as the pound has come down. So the overall idea of this plan from Rishi Sunak is to essentially get the UK to a position where the pound goes up and things just don't cost as much money. And also people invest in the country again, because we saw massive outflows of capital in stock markets and also in their gilt market, which is just like a treasury. So we saw loads of this as an impact of, I've forgotten her name now. Liz Truss, who came in and basically screwed the economy. It didn't really work. And so the pound has dropped against the US dollar from was gained, I should say, from 1.03 up to 1.18. So this does spear some optimism, should we say, inside the US economy. Now, the reason why I'm bringing this up, because we don't often talk about the UK, it's relatively small in terms of, economic size against the US. But I think this is now going to offer investors a different place to put their money. We also see, as you can make out here, core inflation from the Eurozone came in at 5%, which was anticipated. So we're seeing this slow down. It's not stopped and it hasn't reversed like as in the US, but we are seeing this slow down. We're seeing the Euro area really open up a bit of an opportunity for investors. And this is going to bring people away from the US. And so hopefully we're going to see the DXY drop a little bit, which is going to give us a bit of, should we say, at least everybody else a chance to actually just, try and do something that's not based in the US. And hopefully that will pump our crypto market as well. Because obviously we know DXY is pretty well correlated to the price of Bitcoin. As you can see, last week there was a possibility of a 75 basis point hike from the Fed sitting at 48%. That's now dropped to 14.6. So a massive drop. This is really, really good. And I think it's because we are seeing news that the cost of living is kind of coming down. People are changing their spending habits. One of the reasons I mentioned Walmart earlier on in the week, even though it sounds mental, I did say that if you remember, I want to see Walmart earnings and are they earning more money? Are people going to more expensive shops? And so, we might look at it, it's completely unrelated. But in fact, what we can take away from it is they had a 9% increase. I don't know if we have the quote here. Yeah, so on Tuesday, they said that sales rose by nearly 9% in the fiscal third quarter. Now, this might not mean very much, but what it does mean is that we're seeing a lot of people, especially in the US, well, only in the US, moving into these lower cost companies. So they're going to cheaper alternatives, which basically means this whole squeeze, the whole squeeze that the Fed is doing is actually having a good impact. I say good. I mean, it's making everybody poor. No one's borrowing money. No one's investing and everyone is poor. So that's not good. But in the Fed's eyes, that's perfect. They absolutely love that. So looking at these lower cost alternatives, this shows that the Fed's plan is working. And so the anticipation is, well, maybe the Fed are going to pause at some point. Well, that hasn't happened. It just hasn't happened. And this is why I think we are going to see, a little bit more of the Fed being quite aggressive. And we can see this here. So the US futures fall as Fed officials damp a pivot hope. Obviously, everyone's wanting them to pivot. We want to slow down. Yes, we might get a 50 basis point here, but it's not quite okay. Let's stop here and just go home, have a good day. Or even let's do a 25 basis point. It's okay. We're still going to do a 50, and we're coming down from, I think it's 3 or 4 consecutive 75 basis point hikes. So it's still really, really aggressive. Do we know where we're going to get to? Probably not. We're looking at February getting up to 4.75, I should say. March, we're going to be looking at 5. So these rate hikes are pretty much being priced in for a long period of time. And also, once we're there, we're not just going to, immediately pivot and then start coming back down. We're going to be at these elevated levels for a long period of time. You can see here the charts of July 2023 still raising into that 5.25. So this is going to be crazy. The stock market's not going to be good for us. I think we might begin to see a lot of this being priced in, and therefore a bit of a pump when we get towards February, March. That's my initial kind of estimation. But we are seeing that things are just pretty much going down the toilet still. So Wall Street was poised for another day of losses amid mounting concerns about the health of the broader economy. Signs that Federal Reserve officials do not see rate hikes pausing anytime soon. Stock markets are increasingly focused on the outlook of the US economy, especially as a closely watched section of the Treasury yield curve remains near levels not seen in 4 decades. And that historically is a signal that the world's biggest economy is on the cusp of a recession. And this is what they're talking about. They're talking about the 10 and the 2-year yield inversion. So every time that this has happened, we've had a recession. So you can see these little red indicators. This is a recession, basically. But with inflation only starting to ease off after hitting decade high levels, and a gauge of US retail sales still increasing. Again, this is the likes of Walmart, for example. Yes, we're seeing more people move to those lower, should we say, lower income type shops, but we're still seeing an increase. And this is why everyone's worried about earnings season, because not as many companies felt the pain. They're still reporting good earnings. I should say, look, they're not good. I think on average, it's like minus 2% if you don't include oil and gas. If you do include oil and gas or like energy, it goes up to +6. That's because they've had a crazy year. So in general, we're down about 2%, but everyone was expecting that the general, pretty much every company in the whole S&P 500 would be down by like, I don't know, maybe 4% off earnings or off expectations, and it's only 2. So relatively, they are doing quite well. And this has led, obviously, with the massive, fantastic story. Thank you, Mr. Sam Bankman-Fried, for the FTX collapse. But we now see Bitcoin and Ethereum. They are shorted by the second and third most amount of time, or most amount in ever, right? Okay, so just looking at this here, we can have a look and we can see, okay, on-chain data shows Bitcoin is currently the third most shorted crypto ever, while Ethereum stands as the second most shorted. And you can basically see this here, guys, if I blow this up, which I can't. Thank you, Coin Glass. This is all this red is like a future. This basically means shorting. All of this green is volume, but going long. So you can see this, everyone's going long. Obviously, COVID hits, and then we have a massive move to the downside. And then we're still getting a lot of shorting action. The more shorting action we do get, obviously, if everyone's selling, the price goes down. And again, as everyone's buying, going long, the price is going up. So we're seeing this. And this, we could argue, is already priced in because we've seen this massive drop here. But if we continue to see this rate where, again, we're still seeing Bitcoin and Ethereum, and to be honest, most of the whole world, most of the crypto world anyway, all of these coins being massively shorted, we're in for some trouble here. I don't see the pain finishing anytime soon. Yes, we have people like El Salvador buying the dip. We're going to buy 1 Bitcoin every single day for the foreseeable future. Yeah, that's great. And there's a lot of like big investors kind of, should we say buying the dip? But overall, it doesn't look great because we still have another article here. Who sold the most Bitcoin in the aftermath of the FTX collapse? 10-year hodlers. They're selling at the highest rate ever. If you've held for 10 years, I mean, yes, you've already made money. Okay. Let's make that clear. They're already in the money because obviously they bought 10 years ago. But the whole question is like, do they know something we don't? We always get a bit suspicious when you see whales or you see long-term hodlers or even miners for that matter begin to sell. And we do worry. But I think this is one of those situations where, for me anyway, I think there's more downside. I think when we have markets like this, we typically see big institutions just offload their positions. And it's usually the retail who begin scooping it up. Okay. And that's in the traditional stock market. We don't really have institutions in the crypto world, but we do have whales, we do have long-term hodlers. And so with this, when we see them selling, but we also at the same time see people trying to buy Bitcoin, if they have a 10-year, vision, that's fantastic. But I think we're going to see more downside, unfortunately. Now, I will just move on. US crypto exchanges lead the Bitcoin exodus. 1.5 billion. I mean, look, not all of this is going to be sales. I think a lot of this is going to be, taking their money off of exchange. At the moment, nobody is safe. Nobody is safe. We're seeing, and I would recommend, guys, not financial advice, but if it's not your keys, it's not your crypto, get yourself a cold storage wallet and make sure that you take your money off of exchange. Okay. Even FTX, they had an acquisition deal with Bitvo, Canadian exchange. That didn't go through. And then I will mention Gemini, 485 million rush off outflows amid contagion fears. And there is this massive contagion, guys. Everyone's just so worried what's going to happen next. We can have a look at this. This was from Nansen, by the way. I think they're amazing. It shows that Gemini saw 485 million in net outflows in the past 24 hours. Now, if we have a look at this, like this is news that's come out. When was this? This was, I mean, just basically earlier today. Now that this is news, and now that everyone's looking at this, if I had a Gemini account and I saw this news that everyone else was, having a run on the bank, I would be the first thing I do in the morning is wake up and take my money off of Gemini because it's just that panic. And so this is going to settle in, and we're going to see much more of it. Again, crypto.com, there's been a similar to FTX, right? There's been an awful lot of resurfacing bad stories. Okay, we're all looking back now and we're like, oh, we should have seen between the lines where the CEO of Alameda Research said she used elementary school math, given that she's like one of the most prestigious jobs, okay, managing Alameda as a trading firm, and she's using elementary school maths. And then, so with FTX and Sam Bankman-Fried, there was some bad signs along the way. People are now looking at crypto.com, which again, we did kind of warn you about. Personally, I would take my money off of there. But the troubling past of CEO and co-founder, Chris, is now the subject of interest, and there's going to be more of this that comes. It appears that before co-founding Crypto.com, he ran an Australian company that shut down abruptly, angering customers and business partners who claimed they were defrauded. Does that sound familiar? I don't know. Hello, Mr. Sam Beckman-Fried. Oh, no, sorry, his name's Chris. In the same day, Ensongo? Ensogo asked the stock market authorities to delist the company. It also told them that it planned to shut down the platform for financial reasons, and everyone just kind of obviously got extremely upset, and they didn't have their money. So now that he's gone on and he's co-founded Crypto.com, people are now getting a little bit worried. There's conversation. I'm going to give him a little bit of credit. According to Crypto.com, Matt David, he no longer had control, nor was he a member of the board that made the decision to shut down the platform. I mean, like, if I had to cover my ass, I'd probably say that as well. And so I don't really think that like there's too much merit to this. It's one of those where, now that people get caught up, they look back and they're like, oh, actually, no, do you know what? I didn't know. Because if you did know, you would be going to jail. You did something illegal. And that brings me on to the kind of final little segment here. If you guys want to see this in more detail, what I'll do is I'll put a link to it in the description. Highly recommend you go and have a look at this. A lot of you, I assume, probably would have seen it, though. It's from Vox, and it's basically the latest interview with Sam Bankman-Fried. So, it was done yesterday. He doesn't really go into an interview, but there is this massive Twitter exchange where they sit and they talk for hours, just back and forth, about everything from, him saying, "Oh, I effed up big multiple times. What was my single one?" And this is what he said: everything would be about 70% fixed, and this is because he went bankrupt. So filing for Chapter 11, he said, is the thing that's really done him in. And so, yeah, you can go through. There's so much he's talking about, and then even he talks about the hack, either ex-employees or malware of an ex-employee's computer, a few hundred M. And so this, like, it, he's answering very candidly to this, especially when there's accusations about his CTO being the most active on the day before the hack, and that a lot of people think it was done by an internal employee. So now he's maybe ex-employee or malware. I don't buy that story, and especially okay, if you've never been hacked, right? Your company is about to be shut down and go into bankruptcy, and you've basically effed up, as you've said here. How convenient is it that you get hacked on the same day, right? You've just been told you have to shut down your exchange, and then suddenly, oh no, there's a hack. Well, then where's everyone's money? I don't know. So it got hacked. Uh, you're on the way out. You've lost. It was worth $19 billion, and then suddenly a few hundred million goes missing. There's just like there's too many dodgy things going on here. And looking at him, he is a bit of a sketchy character. Everyone's talking about his amphetamine use, and so yeah, he said, I have 2 weeks to raise $8 billion. I don't think that's going to work. I don't think that's going to work, mate. But anyway, I highly recommend you guys go and have a look at that. I will have a quick look at the comments. Good day. Smash the like button. Thank you, Crypto Invest. Absolutely, you should do that. Hey, hi, hello. Remember to smash the like button. You guys are doing my job for me. This is absolutely fantastic. I love it. On the path to 10K Bitcoin for sure. Absolutely. Does anyone disagree with this? Do we feel as though we might get, I don't know, maybe just a drop only to maybe 15? Is there a barrier that you guys might, that you might see, as opposed to a full drop all the way down to that kind of, what should we say, 10K 10K Bitcoin? Because I think if we go below 10K, I think we're going to be in some serious trouble. This is where, I mean, even, was it MicroStrategy? I believe their margin call is around 13. So a lot of companies are going to start getting their margin calls relatively soon. And I don't doubt that that's going to put even more people in even more stress. Because obviously, take the likes of, I don't know, Gemini. They obviously have debts. So it's a company, they take on debt, they build stuff, and then that stuff makes the money and they pay back the debt. Okay. It's just what companies do. This is why the Fed raises rates so that businesses can't expand and they can't spend more money on new stuff. They just have to sell what they have. And then ideally that makes them have less money. And then there's not any like crazy increases in like wage prices, etc. But everyone has debts. Okay. And I'm going to say, most. Hopefully they have enough liquid assets to cover those debts. And one thing about these different crypto exchanges and also crypto hedge funds is that they need to have liquidity. Okay. And even Sam Bankman-Fried, he said, look, it's fine. Alameda, they owe us like $10 billion. That's fine. We can just get it back. His argument was that he thought they were liquid when actually they weren't. So because they're not liquid, they can't pay their debts. And now when you get things like people taking out $500 million from Gemini, even though they shouldn't be using customer funds to kind of prop themselves up, it seems as though a lot of people do. And this is one thing that Sam Bankman-Fried said. He was like, look, everyone does it. He just said that, where is it? Let me see. I think it was further up. He said, look, everyone does it, but yeah, we will never invest your deposit. This was factually accurate. But their deposits were totally not there. Or do you mean technically it was Alameda? Yeah, correct. So like his argument is everyone's doing it, but we thought they had enough collateral. But the bottom line is they don't. And I think we're going to see a lot more capitulation from different exchanges. I think we're going to continue to see more headlines. Where are we? Like this 1.5 billion coming out in 1 week. So yeah, overall, guys, I'm going to say stay safe. Make sure that you take your crypto off of the exchange and like the video, subscribe to the channel if you haven't already, and also drop a like for Mr. AJ, who unfortunately couldn't make it. But anyway, thank you very much. See you tomorrow.